In today's video, we are taking a look at the macro and short-term charts, discussing exactly what is happening, what you should be paying attention to, and even how the recent Federal Reserve interest rate decision has affected the market. We'll also be taking a look at the total cryptocurrency market, discussing why the macro charts are still bullish and what would need to occur for us to enter a new bear market. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day. In today's video, we are doing an in-depth short-term and macro analysis for Bitcoin, discussing the possibilities moving into next month. We'll also be taking a look at the recent Federal Reserve interest rate decision and press conference, going over what this means for the future of the risk asset market. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join our VIP channel. We of course have our VIP channel here. We post daily trading setups with, again, exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything else you need to follow along. You'll also get access to our group chats of over 700 members, our general chat, our trading chat, education chat, our daily video, and our help and news chat. If that is what you're interested in, we do have a sale at the moment. You can find out more information by clicking the pinned comment in the free channel to find our 20 to 30% off sale. Check it out, guys. Click the links, join up, and let's jump into it. So taking a look at the price action. Not really all that much has happened on the short term. We have seen a little bit of short-term volatility as we'd expect moving into the interest rate decision. All in all, the price action was able to see a pretty strong move upwards on the short term during that Federal Reserve press conference. As a consequence of interest rate themes paused, we did see an initial sell-off, with the price action dropping from around 102.8 down to 101.4, and during that Federal Reserve press conference, we did see a rally back toward the upside. Now, the Federal Reserve interest rate decision did come in at a pause. We saw a pause for the interest rates, but the overall narrative discussed in the Federal Reserve press conference following after was uncertain, and as quoting by Jerome Powell, playing a game of waiting. They're waiting to see how the data develops, but overall they still did push for the intention that they are going to see interest rate reductions in 2025. And while we hold on to that intention that we are going to see interest rate reductions, even that may be a little bit later than expected, the market is going to inherently going to take that as a positive sign, but not just, maybe just not on the short term. So we'll come back and discuss that in a second, but we have seen as a consequence of the interest rates, a little bit of short-term volatility of the price action. And of course, with that volatility, we see liquidations increase and we see volume increase. We see around $243 million in liquidations in the last 24 hours, with volume sitting at around $208 billion. The DXY has seen a small bounce from our horizontal support level. Again, the support being the prior range high of this high time frame consolidation. While we sustain above this level, the possibility for reversals upwards are in check. However, a loss of this local low will result in a continuation toward the downside. We can already see on the RSI that the prior low is going to be dropping just below this prior low on the RSI, indicating that we might be experiencing a little bit of exhaustion as we do come down to retest this level of support. If we do break this horizontal high, we are watching for corrections toward the midline. This will be bullish for risk assets. Of course, if we do bounce upwards, this will be bearish for risk assets on a general consensus. Moving over to the S&P 500, we can see A lot of volatility still here on the weekly chart. All in all, guys, we are watching for that RSI breakout. As we've been telling you guys throughout the entirety of the week, we are watching for two things to then expect continuations for the S&P. Number one, we are watching for a weekly close above the prior high. We did see that. That is a tick. And number two, we need to see this RSI breakout. We need both of those things occurring. We cannot just have one. If we see one of those things, we run the risk of fake outs and deviations, as we have seen. And if we get both of those things, it would suggest that the momentum, e.g. the strength of the buying pressure, is there to actually facilitate the price to sustain above these prior highs, and the probabilities thus become in favor of continuations upwards. So until we get that RSI break of that trend line, we are still going to be cautiously optimistic, and there is a potential for pullbacks. So before we get into anything else, let's just go over what we're going to be discussing. We, of course, are going to be discussing the interest rate decision. We're going to be going over a quick keynote we talked about and posted in our Telegram channel. If you want the whole keynote over here, going over exactly what they discussed in detail, you can go to a Telegram channel, guys. It's in the free Telegram channel. I did post it there. So if you want to read the whole thing, click the link, check it out, read the entire thing there. We'll discuss it briefly in today's video. We'll also be taking a look at the short-term price action, the weekly and daily charts, as we are still in this weekly range, and of course the macro charts, including the altcoin market. So before we get into that, go ahead, guys, sign up to BitGet, BitUnix, or BingX. The link's down below to these exchanges. You'll support me making this content. You'll support yourself in your trading journey, and guess what? You'll get 15 to 45% of all your trading fees for life by signing up to those links based on your trading volume. So check it out, play an ad, and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. And I want to take a look at the interest rate decision first and foremost. And the key points I want to tell you in today's video are essentially the key narratives pushed during the Federal Reserve press conference. And a lot was said. There are a lot of things talked about, the tariffs that were planning to be imposed by Trump and the implications that may have on the economy. There was talks about inflation, the job market. There was even talks about, banks potentially being able to facilitate cryptocurrency transactions. And although all those things are good and somewhat could potentially be bad, they don't have direct implications on the perceived systematic risk or potential monetary policy developments in the future period, at least from an immediate standpoint. What do have potential to change the narrative of the interest rate decisions, of course, and in regards to the interest rate decision, the overall consensus is that we are still looking to see interest rate cuts in 2025, but as specifically stated, and I'll quote from Jerome Powell, the market might not be in a hurry to see these interest rate cuts. So we could actually see them occurring later. We're looking mid-2025 instead of earlier, what we were looking to be around March to April 2025. And as stated by Jerome Powell, the markets might need to adjust expectations for a slower easing cycle than previously expected. Now again, while the overall narrative, which is interest rates will reduce, remain intact, it doesn't really matter the speed of which that actually eventually comes to fruition. The market is still relatively going to be holding on to the fact that in a future period, interest rate reductions are going to occur and the market should stabilize at these higher levels, provided that expectation is still intact. Now, they also did mention there is a possibility we could see more interest rate reductions, but that is going to be on a case-by-case basis, quote from Jerome Powell, we wait and see. So we're going to be waiting and seeing how that data develops, how that data comes in, and that is going to massively influence the decisions surrounding interest rate reductions. But the bottom line is that they still expect interest rate reductions in 2025, but maybe potentially later than prior expected. That is the overall message they pushed across. So if we're taking that information and applying it to the charts, we understand that now we're looking to leading data of what may potentially influence the decisions to change interest rates potentially sooner or later. We are now identifying two particular points which may act as immediate trigger points or catalysts for the price action to move. That is going to be on the 7th of February, we have NFP and unemployment data, and the 12th of February, which is going to be our CPI data. These results and these days are going to have massive implications on the short-term price action and may act as catalysts for the price to move, particularly after the statement, the wait and see statement Jerome Powell did push forward in today's meeting, which is essentially they're waiting to see how the upcoming data is going to react and come in to make decisions on interest rates in future periods. So all in all, guys, the price action in my eyes is going to be unlikely to lose these lows. That is more or less solidifying the fact that, look, we are looking to have interest rate reductions. The market is moving generally in the direction, or should I say the economy is moving in the direction we want to see it. The inflation is moving towards the direction we want to see it. Not as quick, but it's still moving there. And based on how that data develops, based on that wait and see policy they're kind of implementing, we will make decisions moving forward. So the overall macro narrative hasn't really been unchanged. It hasn't been shifted. And while that overall macro narrative hasn't been shifted, we shouldn't expect the price action to do something contradictory to what was expected prior to getting this information. Because again, monetary policy stipulates demand, and that influences price action. So in terms of our high time frame levels, we are more or less watching exactly the same things. Let's talk about our weekly chart. If we go back to the weekly chart, we have still got that weekly range. The weekly range is going to be sitting between the prices, and I'll show you the weekly highs is going to be the price of around 104.4. Okay, and the weekly low is going to be the price of 93.7. These two black lines are our weekly range. We are still watching now for weekly candle closes above and below these ranges to then make reactionary moves towards our daily highs. Our daily highs 108.3 and our lows 88.7. So we're watching those levels with very, very strong eyes, guys. On the weekly chart, if we are able to break upwards, it is likely we are going to see continuations. Of course, if we take a measured move of that range and apply it to the breakout, that takes us well into a new all-time high. And if we take a measured range move and apply it to the breakdown, that takes us below 86,000. And as we know, $86,000 is a critical level of support on Bitcoin's chart. Moving to the short-term charts here, we can see 86,000 is essentially going to be that last level of support before we enter a massive low historical resistance range, which takes us down to 72,000. To quickly touch on the low historical resistance range, a low historical resistance range is simply a range of price action on a vertical scale measured on a horizontal scale, where the horizontal volume requirements for the price action to move between price points is significantly lower than opposed to areas such as this, where we have larger amounts of historical volume. That opens up the potential for price action to move in a very volatile and sporadic manner, and often we see massive reactionary moves in the direction of which the price action enters these low historical ranges, meaning if the price action were to enter this low historical range from the top side down, we would likely see a strong correction in the price action. Whereas if we enter the upper low historical resistance range, which is going to be above the prior high, from the bottom side up, we would see a large reactionary move toward the upside. So as you can kind of develop from what we're talking about already, the overall expectations from the price action haven't really changed, and unfortunately, we didn't really get too much more clarity from Jerome Powell, as we were hoping. We were hoping we were going to see some more clarity. We were hoping we were going to get some definitive answers to when interest rates going to occur. We were hoping we were going to get a definitive answer in regards to maybe we were going to see more than 2 interest rates, but they played it safe as they usually do. They gave us nothing of real actionable information besides wait and see to see how everything develops. So we are kind of holding the market on this line and dragging along, and the market's really underneath their thumb, if you want to put it in that way, in regards to where it's going to go. So we have to wait and see. At the end of the day, we don't control the market. We can only, go off the information we are provided, and that is the information we've been provided. So we have to wait and see, along with everyone else, to see how that data develops to make the best decisions. But from a technical perspective, we are still going to remain bullish. We are bullish above these lows, okay? Provided we hold these lows, we are going to be bullish. If we take a break above these highs, we are then expecting the next leg toward the upside, and we'll talk about the short term in just a moment. So let's go over to our short term price action now. If we take a look back at this daily chart, we can see the price action is doing one very good thing, and that thing is that we are holding above this $100,000 region relatively well, which is a really good sign. In fact, we've now closed around about 8 or 9 candles above 100,000 with some major wicks into here, showing us there is a lot of demand at these levels still. This $100,000 region lines pretty closely to the mid-level between our daily ranges, meaning if we do lose this $100,000 region, we are going to enter what we would consider a bearish range, or the weaker range of this higher time frame channel, which could facilitate a move back into these lows. So ideally, we want to hold above 100,000. If we hold above 100,000, the potential for moves back into these highs are greater than the potential to move back into these lows. Let's now move over to the short-term price action. Jumping over to this chart over here, we can see on this chart, we have actually managed to put a dent in this 4-hour downtrend. Now, this 4-hour downtrend, of course, we've got our 4-hour uptrend. These are the two levels we are kind of watching pretty closely. Now, I don't really like to apply too much significance to breakouts or breakdowns that are as a consequence of news events. So we are kind of not really applying too much significance to this level, but it's still a point of interest we have to be paying attention to. The most important level we are watching, however, is going to be this uptrend, this 4-hourly uptrend. The reason being is because it cuts through that $100,000 support. We know that a loss of 100,000 increases the probability for corrections back into that $90,000 region. So we do have confluence now between this 4-hour uptrend and that $100,000 level. Ideally, no matter what happens over here, we want to hold above that 100,000 and above this 4-hour uptrend. And if we do that, the possibility for continuations back upwards are on the cards. So overall, guys, that is it for Bitcoin. There's really not much more to say. The news has just come out, in a matter of 4 hours ago. The market is still trying to absorb this information. The overall narrative hasn't changed. The only adjustment is that interest rate reductions may occur at a later period than what we prior expected. They haven't mentioned that we won't see interest rate reductions. They didn't mention that we might see more interest rate reductions. They alluded to the fact that if the economy and if the inflation comes down to a better level and quicker, we might see interest rate reductions sooner and we might see more. So they alluded to that fact indirectly, but they haven't directly said anything that has cleared up the overall uncertainty that we have seen in the market. So we are watching closely for the upcoming economic news. Again, CPI data, NFP data, which is going to be leading for inflation, that can provide us with some more information to hopefully be able to project how they're going to react in the future interest rate decision. So all in all, guys, we are now looking at the horizontals. We are now watching the technical levels for our primary basis of decision making, and we are watching this range. This range has been by far and large, it's only been about 2.5 months, but it has already been more painful than this 8-month consolidation, just because the price action is still moving from a position of uncertainty and no real clear direction within its movements. So that is it, guys. Let's move over to Bitcoin dominance. Bitcoin dominance is still going toward the upside. Not much to say over here. Uncertainty is still present in the market. Even during the decision today, even during that conference today, we can still feel and sense the uncertainty. That overall wait and see approach is literally just uncertainty. We are unsure on how to act, and therefore we are waiting and seeing. That is essentially what Jerome Powell is saying. So with uncertainty brewing, Bitcoin dominance is going to rise and altcoins will generally suffer against Bitcoin dominance. Looking at the total market cap, a very important tool we are still basing our macro decisions off. While we were staying above 3.01 trillion, we are going to be macro bullish. Okay, we do not expect cryptocurrency to enter this major macro bear market while we sustain above this region. If we drop below this region, we are in a lot of trouble. Absolutely. But while we sustain above, we're the potential to follow that 2021 cycle and see that macro continuation toward the upside. That is something we are watching very, very closely. We can also see on the total, we do have this major uptrending diagonal trend line. This is something we are also going to be watching very closely. If at any point this level does break, that is going to be a major reversal point. If we just invert that chart and imagine this to be a downtrend, right? If we were to break this downtrend, that would signify the end of the downtrend and the price would likely to reverse. So provided, again, we hold this level of confluence, this horizontal level with this uptrend, we are expecting macro continuations. If at any point these two levels break, that is when we are going to be expecting the bear market to start and the macro uptrend to be officially over. If we want to take that a step further, a loss below 86,000 for Bitcoin would likely be the catalyst for the total market cap to break down and enter a higher time frame downtrend, and would most indefinitely be the catalyst for the weekly chart to lose to 62.09 in the RSI, which historically has resulted in double-digit corrections for Bitcoin every single time we drop below it. Not bear markets every time, but double-digit corrections every single time we drop below it. So we do have to pay attention to that. Moving over to the altcoin market, I'm not loving the look of the altcoin market yet. Like I said, we need to see Bitcoin show more strength. We need to see the altcoin market show a lot more strength over here. Like we've mentioned, the next entry point in our eyes for altcoins will be when we clear this prior high. So this 1.13 trillion, which is also the 2021 high. When that level breaks, that is when we're going to be confident on altcoins. Until then, we can see this laddering downwards effect, this nice clear downtrend. We've got again highs, lower high, lower high, lower high, lower high, lower high developing. We've got a very clear downtrend here for altcoins. And even these short-term bounces we are seeing on altcoins is not enough to reverse these downtrends for us to be confident in taking these higher time frame swings toward the upside just yet. Okay, we are watching for corrections still. We are cautiously optimistic, but we are going to turn macro bullish again on altcoins above 1.13 trillion. Thanks for tuning in, guys. Have a fantastic day. We'll catch you guys in tomorrow's video. The price action will have developed by then more. We'll have much more to say and much more actionable information, but I wanted to jump in and give you an update on, I guess, what to expect from this interest rate decision, how it impacts the markets, and how the price action is responding, and what we are watching now after that interest rate decision has passed us. Thanks for tuning in. Catch you guys on the next one. Bye.